Hello and welcome to this beginner's guide to exchange traded funds or ETFs. This is a second video in a three-part series looking at ETFs. In this video, we will explore the top ETFs by sector. In the first video, in the first part, we looked at the best overall ETF. And in the third part, we will look at the best overall dividend ETFs. A word of caution, do not take this video as investment advice. I'm a random bloke on the internet providing a summary of my research, which is based on a couple of decades of experience. But please do use your own evaluation before investing your hard-earned dollars. Before we get started, please also consider subscribing or liking the video as it really helps reach out to more people. So if you're watching this video, you're the kind of person who recognizes the value of investing in the stock market, but doesn't want to invest in a single stock. You'd want to balance out your portfolio and invest across a number of companies, hence an ETF. The problem is you know some industries are just doomed to failure. I'm not going to attempt to predict which ones, but you don't want to get caught out in the wrong end of these investments. So which sector to invest in? Now there are 11 main sectors that stocks listed in the market are classified under. Investing in an ETF isn't just about the highest returns. You want something safe and stable. Otherwise, you'd just rather invest in individual stocks. So we're going to use some basic criteria to select the best ETF in that sector. These are number one, low fees. High fees eat into your returns very quickly. So we want very low management fees. Number two, choosing something that's very liquid, that's very active in the market. So when we're ready to sell our investments, there is a buyer prepared to buy it. Number three, size of the funds. We want to be in an investment which is trusted by a lot of people, just to be safe. So let's say you started with investing $1,000 at the start of each year since 2016. So by now, that would have made it $6,000 that you've invested so far. In the bottom spot, at number 11, it's the energy sector, oil and gas. My favorite one here is State Street's XLE. Now with a $6,000 investment in this sector, you would have lost money. It's been doing phenomenally well as a sector in 2021, but over the last 5 years, it has been a massive underperformer. Now, dividend payments are a lot higher than other sectors, and yields stand at over 4%. However, that would have still been around $750 over the entire 5-year period, which just about gets you to break even. Not that great an investment. Expense ratios are quite low at 0.12%, and net assets are quite large at about $55 billion. The one thing to watch out for is that Exxon and Chevron accounts for over 40% of the assets, so quite a large exposure there. Now, I'm going to digress for a minute. If you had invested in clean energy, on the other hand, you would have actually more than tripled your money. My favorite here is TAN, T-A-N, Invesco's solar ETF. Expense ratios are a little bit high at 0.69%, and net assets are a little low at about $3 billion. Returns, however, have been phenomenal, and with Biden's policy to move towards green energy, you would expect this sector to continue to perform well. The fund invests at least 90% of its assets into solar companies, such as SolarEdge, Enphase Energy, Sunrun, First Solar, and so on. At number 10, it's Real Estate Fund, VNQ by Vanguard, that tracks publicly traded real estate investment trusts, or REITs, and other real estate investments such as Vanguard's Real Estate Index, American Tower Corporation, Crown Castle, Equinix, and so on. Your $6,000 investment would have been worth $6,891 today. The ETF also has strong yields that sit at over 3%. Expense ratios are quite low at 0.12%, and the net assets are actually quite large at about $70 billion. At number 9, it's the utility sector, and I'd go with State Street's XLU. which would have given you $7,069. The fund has $12 billion in net assets, expense ratios are quite low at 0.12%, and dividend yields are fairly high at 3%. This fund invests in electrical utilities, water utilities, multi-utilities, independent power and renewable electricity providers, and gas utilities. So that's companies such as Next Era Energy, Duke Energy, Southern Company, and so on. At number 8, it's the consumer sector, and Vanguard's VDC, which would have netted you $7,302. Net assets stand at about $6 billion, and expense ratio is just 0.1%. Yields are also pretty decent at about 2.5%. So there are companies like Procter & Gamble, Coca-Cola, Pepsi, Walmart, Costco, and so on. Next up is State Street's XLF in the financial sector. They would have given you $8,249 in return. They have net assets of about $40 billion and a low expense ratio of about 0.12%. Yields sit at just under 2%. So alongside energy companies, this is another sector that's had a phenomenal run in 2021 so far. They invest in companies across the financial services industry. So think about banks, insurance companies, capital markets, mortgage, real estate investment trusts, consumer finance, and mortgage finance. So some of the biggest holdings are in companies like Berkshire Hathaway, JP Morgan, Bank of America, Wells Fargo, and American Express. At number 6 is the communications sector and Vanguard's VOX ETF that would have netted you $8,394 in total. Net assets stand at around $4 billion, so relatively small, and expense ratios of 0.1%. Yields are generally non-existent at under 1%. Over 1/3 of the portfolio is invested in Google and Facebook, so there's a high exposure to those two companies. Other companies include Disney, AT&T, Netflix, Comcast, and Verizon. At number 5 is the industrial sector, and I'd go with State Street's XLI, which would have given you $8,499. Net assets are at over $20 billion. Expense ratio is at about 0.12%, and yields are relatively low at 1.25%. The ETF comprises of companies across the industrial sector, so aerospace and defense, industrial conglomerates, marine, transport infrastructure, machinery, road and rail, and so on. So there are companies like Honeywell, Union Pacific, UPS, Boeing, Caterpillar, and so on. Next up, it's the healthcare sector, and I'd go with Vanguard's ETF VHT, which would have given you $8,636. This particular fund has net assets of $17 billion, an expense ratio of 0.1%, and yields just over 1%, so relatively low. The index invests in companies across the healthcare sector, such as Johnson & Johnson, Pfizer, AbbVie, Merck, Eli Lilly, and so on. Right, so now we're in the business end of the top 3. At number 3, it's State Street's XLB in the materials sector, which would have given you $8,859. So these are companies across various industries such as chemicals, metals, mining, packaging, forest products, construction materials, so Lind, Sherwin-Williams, Air Products and Chemicals, Ecolab, Dow, and so on. Net assets stand at about $8 billion, expense ratio is 0.12%, and yields at about 1.5%. In the runner-up position, it's consumer discretionary or cyclical stocks, and Vanguard's VCR ETF, which would have given you a little over $11,000. Net assets stand at about $7 billion, expense ratio of 0.1%, and yields of 1.4%. So investments are in companies such as Amazon, Tesla, Home Depot, McDonald's, Nike, and so on. Finally, at number 1, it's the technology sector, and Vanguard's VGT ETF, where you would have more than doubled your money at $13,046. Net assets stand at over $50 billion. Expense ratio is just 0.1%. But as you'd expect, the yields are non-existent at under 1%. Top investments are in companies such as Apple, Microsoft, Nvidia, Visa, Intel, and so on. So there you have it, the top performing ETFs by sector. However, there is one other ETF and a sector which has far outperformed any of these ETFs. And that top performing sector is Disruptive Technology, and an ETF such as ARK-K. Your $6,000 invested over the last 5 years would become $21,880 today, even after the recent crash. Net assets stand at about $23 billion. Expense ratio is a little bit higher at 0.75% because it is an actively managed ETF. They focus on US and global companies that are relevant to the theme of disruptive innovation. So they are companies such as Tesla, Teladoc, Roku, Square, Shopify, and so on. So that's it, the entire list of all the ETFs mentioned in this video, and what your $6,000 invested over the last 5 years would have been worth if you had stuck to that sector. I hope you found this analysis helpful and useful in your investment journey. If you did, please consider subscribing, smashing that like button, and leaving a comment below. Many thanks for watching, and look forward to seeing you at the next video.